We're seeing lots of negative momentum coming through from the markets, but however, we had East African Cables results out yesterday. Company declaring an interim dividend of about 30 cents. Seems like the market did like it there. The share price moving positively upwards.
Well, thank you, I was glad to be on board. Well, we have very good sentiments also, as much as the market looks like it's headed on a downward trend. The cables matter, the final listing of TransCentury, the pending IPO of British American. But what has happened is that there's more of foreign investors and institutional investors having much more play in the market, and hence retail investors have taken a backseat. That's why you notice that the demand in essence for the shares has more or less been driven by the likes of foreign investors.
Looking at foreign investors, which sectors are they focusing on at this stage?
Well, if one of the key picks that has happened with has been TransCentury, and for obvious reasons, in terms of its well-diversified portfolio, it's second to Centum, or actually much larger to Centum, because of its market capitalization as of yesterday is about 15.6 billion as opposed to Centum's 13 billion. And given its wider portfolio and the larger East African market in which it is it's operating within the larger East African and further down to the South African market, there's very much demand for the kind of business it's running, and this is actually proven to be much suitable to would-be investors and a viable investment for the long run.
Would you say that when all these IPOs have cleared the market and everything has settled, we could see some positive momentum coming through the markets?
Well, there's still one key problem, despite the IPOs and everything. There's still the rate of inflation, which is very high. Lending rates are trying to be stabilized. There's we see with the inflation, high prices, so that will still tend to be a big problem and will affect in terms of how the stock market operates in the near to long term.
Looking at Safaricom coming off very well there, up over 5%. What was really driving that stock today? We did see it, however, coming under pressure for most of the week.
Well, there's been two elements. On one end, there's what is called the profit taking. There are those who have been trying to sell off to partake within the coming IPOs. There are those who actually sold off some of their shareholding in Safaricom to move into the coming IPOs. Then the others who are the foreign investors who also have an interest in Safaricom, because in the long run, as much as it has very low prices, or what most people tend to think that they got a raw deal, it's actually a very profitable company in the long run, because when you look at its ability to maintain its ability to maintain its profitability, two, its ability to be innovative. Despite the competition from the likes of Airtel, the likes of the likes of Orange, it still has a market edge over the others. And venturing into data, which is the next frontier in terms of revenue, it will still be able to hold its own. And hence, if you look at it in the long term, there are those investors who are like, I'd rather hold on to it now than sell off and later on come to regret in the future.
Moving from Safaricom, we're looking at the cement players now. A report from Renaissance Capital out yesterday said that limestone deposits and growing demand in East Africa will drive the profitability of cement companies in Kenya. Are you also of that view? Well,
I am of that view, because if you look at one of the interesting things, construction has actually been the second more highly we're growing industry in the company within the country, and the one that is employing one of the highest number of employees. And two, in terms of investment within the construction industry, in terms of foreign direct investment, is about 5 times any other segment within the market. And this has gone to show that there's a lot of demand for construction. And when you look at the larger East African region, you notice that within the East African region, the two main deposits of limestone are in Kenya and Tanzania. And when you look at by the extent, Athi River Mining with its plant down in Tanzania over a period of time will be one of the largest producers of limestone, which is one of the key ingredients for production of cement, the clinker in it. So what will happen is that the demand is ever increasing. As a community expands, the East African region, you have demand from Burundi, you have demand from Rwanda, we have demand from the newly formed South Sudan, which will have major infrastructure projects that will have a big demand on cement. So yes, it is going to be one of the key areas of growth, and as by virtue of that, the cement companies would be companies to hold on to or to think of investing now before the prices will tend to be way beyond the reach of ordinary investors.